Mutual funds sahi hai. We have all heard of this campaign and understand and realize the importance of investing into mutual funds for long-term wealth creation. However, the most common question that we have come across while interacting with investors is how to choose and select the right mutual funds and monitor them regularly. Today, I, CFP Rajit Kothari, will discuss a step-by-step approach to build, evaluate, and monitor a mutual fund portfolio in a systematic basis. This is how we practically help our clients navigate through their mutual fund investing journey. Step 1. Analyzing the financial profile. Mutual funds do not have a one-size-fits-all approach. It is important to evaluate the individual financial profile of the investor in terms of the financial goals that the investor has, the assets and liabilities held, the cash inflows and outflows of the investor, and most importantly, the kind of risk in terms of the volatility that the investor is willing to take in the investment. Once the financial profile is clear, it is easier to bifurcate and allocate the investment into various different categories of investment of mutual funds, which is large cap, mid cap, small cap, so on and so forth, depending upon the kind of financial profile that the investor has. Step number 2. Selecting the right mutual fund. Once the allocation into different categories of mutual funds is set, it is important to select the appropriate mutual fund scheme amongst that category of mutual funds. To give an example, when there is an allocation into small cap funds, it is important to select the best performing small cap funds out of the entire basket. We prepare something called as key performance indicators, which helps us decide the appropriate mutual fund scheme, which has got data points into different categories such as past returns, the quartile performance comparison with the benchmark, which could be BSE 250 small cap. In this case, the bifurcation across large cap, mid cap, small cap into the underlying portfolio, the portfolio turnover ratio, meaning the number of times the portfolio is churned during the year in which the mutual fund is holding the investment, the different financial ratios such as P, PB, and the bifurcation of that investment into various categories of companies such as large cap, small cap, and mid cap. Step number 3. Building a mutual fund portfolio. Once we have selected the right mutual fund schemes and the categories, it is important to allocate them into something called as an asset allocation matrix, which gives the details of various categories as well as the various schemes of mutual funds in terms of the amount and as a percentage of the total. This helps in evaluating the overall mutual fund allocation portfolio that is projected and helps in taking decision making at the macro level of the portfolio. Also, it is important to bifurcate and have an appropriate mix of different asset management company such that the mutual fund portfolio does not become lopsided or tilted towards only a few mutual funds or is not too much diversified and scattered across a lot of mutual fund companies. Therefore, a healthy bifurcation across different asset management companies is important to have appropriate bifurcation in terms of the investment thought processes that may vary according to the market cycles. Step number 4. Reviewing the mutual fund portfolio. The final and the most important step which a lot of investors miss out on is reviewing the mutual fund portfolio on a consistent basis to ensure that the portfolio is aligned with the changing market dynamics and we exit the investment opportunities which are not performing well and enter into newer ones which are much more promising and which have emerged lately. To give an example, we conduct a thorough review of the mutual fund portfolio of our investors and on a systematic basis and suggest them funds in which they should go for a switch option, meaning changing a scheme in the same asset management company or redeeming from a particular mutual fund scheme and reinvesting into another promising investment. This ensures that the portfolio is agile and dynamic across the changing market cycles and is not a laggard or underperforming at any point of time. Having managed thousands of mutual fund portfolios of investors across the globe, we believe that the process of investing into mutual funds is something that actually determines the kind of wealth creation that the investor can make on a long-term basis. Contact us and allow us to be a meaningful part in your mutual fund investing journey. For more such content on finance and taxation related topics, subscribe to our channel and follow us at the earliest possible.